We do want to turn now to the cost of buying a used car. It has dropped 7% this quarter, the worst decline since the beginning of the pandemic. Now, although low prices may sound appealing, investors fear a struggling economy could lead to trouble with auto loans. Correspondent Marky Martin joining us now to break this all down. And Marky, why are banks warning of trouble ahead?
Hey, Natasha, well, there are a lot of moving parts here, but that trouble has already begun. Remember at the height of the pandemic when buyers were paying well over sticker price for almost any new or used car that they wanted? Well, now supply is finally catching up to demand, so car prices are having a moment of deflation. However, at the same time, because of rising interest rates, monthly car payments have never been higher, and certain lenders are losing money.
Three of the country's largest auto lenders are reporting auto loan losses and/or pulling back on originations. Ally Financial, the second largest lender, saw charge-offs for retail auto loans quadruple in the third quarter. According to the Consumer Price Index, used car prices have fallen 3 months in a row, the worst decline since the depths of the global financial crisis. Some Americans now rushing to dealerships to try and maximize their trade-ins.
I was actually trying to stay sort of ahead of the wave and try to get like the most I can get for the trade before, before the bottom falls out.
But while car prices might be sinking, rising interest rates mean monthly payments are simultaneously skyrocketing.
The average payment on a car loan is now $738 a month.
Chris Gardner is the CEO of Vamos Auto in Dallas-Fort Worth, an integrated finance company specializing in the subprime car market, making them not only a dealer, but also a lender.
When the Fed raises rates at 75 basis points, what seems like monthly, it's going to increase those auto loan rates at a faster rate than the decline in car prices.
Gardner says the problem is this: if consumers end up owing more than their cars are worth, some might stop making payments altogether and let the vehicles be repossessed, something lenders are already seeing.
As these loans default and these lenders take them back in, they're receiving less when they go to sell that car and recover on their loan.
And it's forcing lenders to alter future consumer borrowing plans. And as for some dealerships, it's taking a little longer for wheels to leave the lot than it did during the pandemic.
At the height, as soon as we would get a vehicle coming in, you would have 3 or 4 people waiting to look at that vehicle to buy it. And the cars wouldn't sit here more than a couple days at most. We're seeing that start to take a little bit longer.
And Natasha, there are differing opinions within the finance world, the auto world, on when these car prices might start to normalize again. Some people say it could be the first quarter of next year. Some people say it could be 2 years from now. However, those prices likely will not return to pre-pandemic levels. Natasha.
An interesting bellwether for our economy at large. Marky Martin live for us this evening. Thank you.
Thank you for watching. Go to newsnationnow.com to find News Nation on your television provider. And don't forget to click the red subscribe button below to get more of News Nation's fact-driven, unbiased coverage.